Good morning, everyone. Welcome. Today it is March 23rd. It is Thursday. Yesterday we had the FOMC, so there's a decent bit to talk about that revolves around all of that stuff. So let's go ahead and just jump right into it because yesterday was a pretty pivotal day. It was one of the biggest FOMC meetings, I would say, of the year, right? Probably the biggest one of the year that we got a lot of information from in terms of where we could be headed next. However, naturally, just like in good old Fed fashion, Jay Powell fashion, Yellen fashion, whatever the hell it is, we didn't necessarily get a straightforward answer. So policymakers at the Fed are treading on a very tightly knit rope here, right? They're hanging by a thread, it would seem, as they seek to balance their role as providers of stable prices and financial stability. So the FOMC voted unanimously yesterday to raise the Fed funds rate by a quarter of a percentage point, 25 bips, to range between 4.75 and 5%, seeking a compromise between pausing rate hiking cycles due to the current banking crisis and prior expectations of a 50 basis point hike to counter stubbornly high inflation. So it marked the ninth straight meeting that the central bank did raise rates. And from the press conference, excuse me, you might see it's a little smoky. I was cooking. From the press conference, we saw that Jerome Powell, um, Jesus, just lost my train of thought. From the press conference, we saw that Jerome Powell mentioned that there's still a steep path ahead that could provide turbulence for the inflation cycle, rate hike cycle. I'm just looking at the probabilities, and we have the next meeting May 3rd, 2023. So in about a month and a bit's time, we have the chances right now that things stay as they are. No hike is 53%. The chance of a single 25 bip hike is 47%. So, in terms of the transcript, it's possible that this quote unquote banking cycle will turn out, or sorry, banking crisis will turn out to have very modest effects. These events will turn out to be very modest in terms of the economy, in which case the inflation will continue to be strong. In this case, the path might look different. It's also possible that this potential tightening will contribute to significant tightening in credit conditions over time. And in that principle, if that means that the monetary policy may have less work to do. We simply don't know. This is from Jerome Powell's mouth. He also reiterated that there continues to be so much uncertainty through the 2023 dot plot was unchanged, and there was some Fed voters that looked at potentially 5.25 points by the end of the year, some even at 6% by the end of the year. So since rate cuts are not in our base this year, that will suggest that the Fed is only planning one more hike this year and will unchanged until December, right? Those are estimates. Language of some additional policy firming was used, and instead of ongoing increases. But the uncertainty factor hit the equity markets, and further comments from Treasury Secretary Yellen about uninsured bank deposits didn't help the situation, dumping the market into the close. So today is going to be very interesting to see how this shapes up. I think today is going to be a pivotal day. It's going to be uh very important to watch how the market shapes up, because I think the bulls still, even though we had a massive drop, they still have the chance to revive this. As we've seen time and time again, uh, the bulls did pick it up. They've been on a stronger bid than the bears. The bears fumbled the bag way too many times over the past few weeks, and today might be one of those situations that I'm going to be watching very carefully. I'm going to give you guys a few levels here. There's not too much else to talk about because the Fed, they're pricing in some cuts into 2024, but still remains fairly uncertain. We didn't get that much information of where the next move might be. So I think in terms of the market reactivity, how this reacts to what had happened yesterday in the next 2 days is going to be very pivotal for the next move. Now, the bulls can take this. They might see some dip buying, and if they manage to get above 4005 on the S&P 500 futures, we can see that pop. We still have tech names that are really strong. They're holding very well. Apple hit like 162 or so yesterday. We saw that Nvidia is pumping like crazy. We saw that just general QQQ is into a resistance that failed. IWM is one of the things that we have to watch. The Russell 2000 small caps, they're very sensitive to economic changes, monetary policy, all that good stuff. And they came back down into a key support region. So we're going to see how that shapes up. Breath is pretty weak still. So if IWM does break through some of these support barriers, we're going to see an extended move for the bears to attempt this market to pull it back down. So today, what I'm going to be watching for very carefully is 4005 on the S&P 500 futures. That is a pivotal region. The bulls can try the mid 70s, 39.70s, and they can try the high 40s/50. That is, I think, the last chance for these bulls to show up before we do see a potential push down into lower blocks. So that's the main thing I'm looking for today. We're going to see how in following weeks, stumbling here, in coming weeks, how the bank crisis, right, is going to shape up, what we're going to see from that, how the Fed might react. They're still on pace for $95 billion of tightening on a month-to-month basis, right? Even though that balance sheet popped a bit last week in times of the banking crisis. Fed Chair Jerome Powell also said he's going to use all tools available to kind of navigate the situation and see that things do hold. So it's going to be very important to see how today and tomorrow shape up. The Bears, right, they had some control until the end of the session. If they fumble this, we're going back up pretty aggressively. So let's see how this thing shapes up. I do want to be kind of neutral in this balance that we're shaping up right now. I want to look to buy some dips, see if the bulls can kind of hang out here. We have 4003 to 05 as a main pivot. Some sellers can come out there. That was about the peak of the highs during the session today, the overnight session. And right now they're battling around this 90 region. Let me make sure. They're just below this 90 region, but we'll see how those key supports that I was mentioning do hold up. Now, we traded this live yesterday in our room, some crazy, crazy gains. I did try to long a few times, right? Took a few stops, but overall we had a 40-point move and about a 50-point move from that 23 before we called it a session, right? So if you want to come trade with us, especially in the mornings, live reading of the DOM, everything, just breaking things down, throwing some trades at you, check out tradeproacademy.com. Also, you can check out our free Discord, community.tradeproacademy.com. With that, I bid you farewell. Can't speak today. Bid you farewell, and tomorrow we're going to wrap this up and the week, see how we do. And today, let's see, right? We're currently in a balanced area into the overnight session, and I want to see how that kind of shapes up on the day session. So thank you all. Happy Thursday. Trade smaller today. Be very, very attentive to who controls the movement of the market, bears or bulls. And I'll see you guys tomorrow. Thank you and enjoy. If you're not trading tomorrow, happy weekend, and we'll see you next time.